what good does it do if you put in a watch list with 20 tickers and it's like, oh, a couple of them are probably going to do well, and then a lot of them are probably going to hit their stop losses as well. I would rather stick to less and then give like three options on one thing. So you have a ticker and you know whether this goes up, whether this goes down. I have a mission and something to follow along with. Now, my question to you, because you're also trading that $500 account, are you up for something that is a higher market cap and like maybe $100 stock or more, which you trade a partial share of, maybe? Or would you like something also below 10 or even below $5? Or would you even like something below $1, something very, well, as we would say, shitcoiny, but then on the equity market?
We've done CRM, which is a $200 stock, and we've done.
Yeah.
We can do anything honestly with this strategy. So really up to you. Whatever highest conviction
Um,
play.
Good. I was talking about this sticker on a stream this week as well, and I actually have this sticker on my watch list because I know it's been talked about in Penny Boys years and years ago, and we've got some very nice moves on this back in the day. I've been here for years. I've been here, not the longest of anyone, but I remember 2021. I was definitely around, and so at that point I was just following along calls and everything, and I definitely looked at GEVO. And I remember that was one of those things that took off. And then even on the way down, there were plenty of bounces that we basically played here. Now, at this point, I'm looking at this chart and it's kind of simple to me. This is the exact same thing as Beyond Meat, but then riskier because it's basically a penny stock. I don't think that this is bottomed out, but I have three levels basically below us, which we would want to get below. And then we would want to close a 1 hour candlestick back above to take an entry. And again, I'm not a long-term investor in this. I'm not endorsing this. I'm trading this in a responsible way, right? So we have 46 cents. And this might be like shocking, but this is the truth with shitcoins. You understand that when the floor falls out, you nuke another 50, 60, 70, 80, 90%. But you also understand if you're trading shitcoins that most of these things before then eventually going to zero still you give you very nice upside moves. So I have a very specific level at 0.1765. And this is basically preparing a community, right, for the scenario where this continues down way lower and then before delisting or before whatever sees a bounce back up that is maybe 100% move. Now, needless to say, this is also going to be, so this moves a lot of percentages up and down. So that is not going to be something that we treat with a large part of our portfolio, right? So 46 cents. And then all the way at 0.1765. And if that level does not hold, which that's very far off, but I can already tell you, right, that this at 0.0522 likely catches a bit and sees a bounce maybe back up to 10, 20 cents for a 2x or 4x. So that's kind of what I'm looking at. A high risk, high reward play, but only to be played with a minor part of your portfolio. Now, the entry, right? So 46, 17, 65, those are the two first levels. We want to get below and we want to close a 1 hour candlestick back above during regular trading hours. Same thing. And for your stop loss, right? And this is now how you got to do really. I can't do that for you because otherwise it's just a scenario where I could hundreds of people give me their account login. I just kind of do it all. But what you got to do is you got to wait until that 1 hour candlestick closes back above either 46 cents or in a scenario where this drastically gets on some kind of nukes, this teleports down, finds itself trading below 1765, then closes a 1 hour candlestick back above. That's where you go long. At that point, right, the 1 hour candlestick back above, just like with all the others, there is going to be a low that is made below that level before you close back above. That is the level where you cannot drop below. So that is the level where you put your stop loss. And again, I cannot tell you yet where that is going to be. But typically, and what you will see, and also the nice thing about these tips and my strategy is that what you will typically see is that price will either get below the level a little bit and quickly get back above, or that it's just going to get below the level and continue quite rapidly to the second one, in which case you just need to be aware of the second one. And so typically the low that is made below that level does not come very far below that level. And at that point, you basically got to see from where you get in to where you put your stop loss, how much percentage move of a risk is that? So say, for example, that's already, for example, a 20% move to your stop loss, then that means that you can apply 5% on your account to basically get into this position. And so targets for this is what I'm really looking at is potentially getting below one of these levels and then seeing a big short squeeze back up where this basically teleports back to $1. But before we get there, I would already pay myself before we get to $1. So I would say 85 cents is 85 cent is a very good level to aim for if we get into a position based around that 46 cent level. And if we get into a position based on that 1765 level, so 0.1765, my ambition here is going to be to trade it back into that 1 pip, so to 46 cent, which is going to be a 2x, and say that, yeah, your stop loss is 20% below where you got in, but your upside potential is a 2x, and you enter just with 5% of your account, so that if you stop out, that's not a 20% move on your account, then you're doing it wrong. But to the upside, you're still looking to make what, 2-3% on your account, and it's basically a nice feeling if you're on board of such a short squeeze. So from 46, the target one is 85, and from 1765, the target is 46. And then just like with all the things, what I'm basically suggesting is you take profit at your target, 75 or 80%, whatever you want to do, goes off, and you leave, for example, that 25% runner, because you literally never know, and that's the crazy point about this market, right? Some of these charts are going to grind down like this for years, and then in a couple of weeks teleport and gap up back here, and then people get excited again and they're buying back above $1, and that's of course where I'm looking to sell this shit, obviously, to them back. But maybe this just really gets going, and you always want to leave something on, that you don't trade yourself completely out of your position. So that's what I have for GEVO. The ticker is GEVO, but Beyond Meat is definitely one that I'm looking at. So I'll do a little bit of an analysis, and then let's come to a trade setup, right? So
Sounds good.
I know for a fact that Beyond Meat is it's one of these stickers, and everybody has kind of a negative opinion about it. And I would say if we look at the chart, for a good reason, because we're constantly making lower highs and lower lows. Simply put, that means that we're downtrending and that we need to be very careful, because for our strategy, right, we're going long. Just we're longing and we're looking for percentage move to the upside. So at the moment, we got to be still very careful, because this is still sliding down. And just because we're up here today a little bit can't convince me that the bottom is in, but I do have some good levels that we can just play from. Very simply, I'll give you a couple of levels, and the idea is that we wait for a move below one of these levels, and that after closing a 1 hour candlestick back above that same level, right, that 1 hour candlestick closure back above the level is our long position, and I'll make it as clean as possible. So first level that I'm interested in is 558, and from what I can see, at least on my chart, is that we've come very close this week. So if I zoom in here, right, we've previously made a low in October of 2023, and in this week we came very close, but we've not hit that low. What I think, right, the base case here is that that is a bull trap, so that people will think too early that this is actually ready for a good move to the upside, and that we will still come down to, at the very least, get below 558. But that is then also the level that if we get below that level, lots of people here, right, will look at today and will say, well, perfect, we're up today. Let's go long on this, and let's put a stop loss either on the low of this week or under that all-time low. And what is most likely to happen here, as we're downtrending, is that these people are going to end up selling, going to end up hitting their stop loss below these lows. Now, if we then see that price manages to creep back above that level, we get a low risk long, and we can put our stop loss, right, under whatever the low is that is made below 558 here, before we close the 1 hour candlestick back above. So I don't know yet, right, perfectly where I can give you a fixed stop loss. You will have to see for yourself after we went below 558 and after we then closed back above. You just manually and visually check on your chart, okay, where did Beyond Meat now actually make a new low? I'm going to put my stop loss there, and we're aiming back to the upside, back to all these lower highs here, where a ton of people are going to have stop losses from shorts. So a good first target to aim for if we get in a position based around that 558 level, I would say is going to be 766. And if we get above 766, I would take 75% of the position there. If we get above that, maybe the squeeze really gets going and my next target would be at 1031. So I'm not expecting the world from this. I'm not here to invest or swing trade this for years, but I would like to get a move back to, again, target 1, 766 and target 2, 1031 for the remainder of the position there. And I hope that that makes sense, Duck. I know very likely that you understand what I'm saying here with the entry and the stop loss and the targets, right? That's the first option. I'm going to give multiple options, right? Because it's not about having 20 tickers on your watch list. It's about having a couple and having so many options that whatever price does, it's not going to surprise us. And we're going to more likely make profit from it. Now, say in this downtrend, we actually break down lower and this thing goes and makes another lower low, a new all-time low. And again, sentiment will be in the floor, people getting max bearish when things are already in a late stage of breaking down. I just want to point to everyone's attention that there's going to be two very specific levels, just like 558, where I'm looking, right, to position myself long. And those levels are going to be 452 and 346. So 452, 346, and the level above that, which we just talked about, is going to be 558. And so, like I said, the entry criterion for all these three positions is the same exact thing. You want to get below the level, then get back above the level and close a 1 hour candlestick back above that level. And that is your entry point. Now, mind you, I will repeat this, that implies a 1 hour candlestick closure back above that level during regular trading hours. So no business taking position after hours or pre-market, right? Now, same thing goes for the stop loss. I can't give you a fixed number. Your task, Duck, right, is to simply look, and that's a good exercise for everyone. After the price gets below 452, we don't know yet if it gets back above. Maybe it just continues down lower to another very specific level where we can look at. But if it gets back above and does close a 1 hour candlestick back above, inevitably you will always have a low that is made below your level of interest. And maybe sometimes it is just a wick to that level, and then the stop loss is slightly below that wick. Or sometimes you nuke below a level, actually spend some time trading below that level, and then close back above. That 1 hour candlestick closure back above is your entry, and the stop loss under the low that is made below 452. Now, obviously, if that low is somewhere if it does something like this, where it goes very deep to our second level, but does not hit it, and then inevitably gets back above this level, we'll update, because we also don't want to put our stop loss super far away and already running towards the next level. But as a general rule of thumb, that's very simple. And so targets for the position based around 452, I would say 75% can come off at 558. And then I would essentially suggest leaving 25% of your position running literally open-ended, and you are going to manage that however you want. Either you're going to trail your stop loss to break even or to profit, or you're simply, well, looking to get the most out of that runner, but securing 75% of the position at the very least at that hard level above you. And so if we get into a position from 346, right, that first target is going to be all the way at 452. So I'm really looking for the move from level to level. I don't know from which level it stops, but I know that I want to play from one of my levels to one of my levels above me, right? So that gives 1, 2, 3 options and 3 very specific levels of Beyond Meat to basically look below us. But, and I say that in the coaching also, I don't want to be seen as someone who is just very rigid and I say, well, price has to come down. Maybe it hasn't. Maybe it doesn't need to come down, right? But then I need to see some more follow through here. And what I need to see to get interested to basically long from higher prices is that first and foremost, we close a weekly candlestick above 6.51. And only if that happens, right, Doug, I will DM you and I will literally give you the details. But I just want to give that perspective that it's more likely that it comes down. But as a smart bull, right, you want to be prepared for those levels and you actually don't care whether that hits tomorrow or next week. You just need those levels. And at some point in the future, if you hit them, it's time to look closely at 1 hour candlestick close back above, right? So I think that kind of does it for Beyond Meat with the 3 levels below us and then the 1 level which we need to close a weekly above. And again, if that happens, I will update you in a DM or so, Doug, or I will post an update on this in my chat with Jay or whatever, and we'll get going on Beyond Meat from there.
Sounds good.
Yeah, good. Do you want to go over the next one?
Yeah, no, that's perfect.
Good, nice. So if anything isn't clear, dude, you gotta just tell me. Just gonna double check. Yeah, those levels are all very good to play from. Let's kind of stay in the loop with things that have not done very well so far, and then we'll also look at some things that are uptrending. So right now, Beyond Meat doesn't really take a rocket scientist to see that we're downtrending, right? And we can still go long, but we need to be very close to the local low. And typically people say, well, play with the trend. So if we're bullish, we can only play with uptrends. But actually, with this strategy, we can also long downtrends because we know where we're very likely going to hit some kind of support. And we can do that. So we'll take another one that is currently downtrending. And then maybe let's take a look at 2 tickers that are uptrending. And so then we have 4 updates, 2 things that are basically downtrending and 2 that are uptrending. And on all of them, we're just looking to go long. I kind of wanted to see Accolade here as well. The ticker is ACCD. If I'm not mistaken, and correct me if I'm wrong, but I think this is already on your watch list. And if it is, then I'll take something else. But you got to remind me because I saw that this was coming very close to our level, but hasn't hit it yet.
Exactly. It's really close to our level.
Yeah, I want to kind of see what we have, but so I want to kind of give an update on this. So what do you do if the price is coming very close to your level of interest, but it does not get below it and does not get back above it? Well, then you gotta just kind of remind yourself of the rules of the strategy. So if the rule of the strategy is that you need to get below, right, and then you need to get back above, and you don't see that happening, then there's nothing to do yet. So I really want to emphasize that I'm not going to take any positions on this before this goes to one of those levels lower down. And then what I ideally would like to see, right, if I'm seeing a chart like this, is kind of that it makes this what some people would call a W pattern, where this gets below the first low, kind of makes a lower low here. So you have this level of support now. And when price comes there, people are going to be interested in buying, but it's likely then going below 323, sorry. But if it gets back above, that's going to look like a little bit of a W, and especially if we have a bullish divergence here on our RSI. So just things that you need to be aware of before they happen, things that I also teach in the coaching, of course. But what you would like to see here, right, is that we're making a low here. And then at some point in one of the next few weeks, maybe, we make a lower low. But that the RSI does something like this, where it comes down. And on your lower low here, does not actually break below the low that it made here. So that you have lower lows on price and higher lows on the RSI. If you see that, and then price gets back above 323, well, I'm very interested to play it from there. But getting in here, I would say that is highly risky, and that does not meet the rules of the strategy. So it's very important to stick to it. Once you deviate from it, and once you say, well, let me just also play levels let me just also play it when I'm just coming close to the levels, that defeats literally the whole purpose. And in fact, if you do that, it's likely going to be highly negative and highly not profitable, because the whole strategy is basically looking here to profit off of people who say, well, this is already bullish from here. I think this is bottom out. Let me put a stop loss on one of these lows, right? So what I am thinking is steps further. People who are thinking that, putting their stops here, I'm thinking, well, we get those stop losses and then we get below that high time frame level of interest. And if, and that's a big if, I then see price get back above that 323 with bullish divergences, then yeah, then I'm on board. But that is literally what I'm drawing out here on Accolade is incredibly important to understand. And if this thing, for example, tomorrow gaps up and trades here and then goes higher, you cannot like feel like, oh, you've missed it, because you need to remember that playing a system and a strategy, it needs to be something that you can replicate over time, over and over and over again. So hope, even though this is not a new position or a new level on Accolade, we'll for sure find some other tickers, but I hope that that helps also for kind of context. Maybe people are looking at this ticker and kind of wondering, oh, 335, it's so close to 323. Maybe Jay's level just got front ran. Look, that may be the case, but more often that's not going to be the case. So I'm not going to bet against that. So we'll take something else, but I hope that this clarifies at least something. I remember it was on the watch list. One of the things I also told my people who are in the coaching, right? I was actually telling them about your account, and I was telling them about how actually, let's just say it as it is, our win rate is actually below 50%. However, right, your account is up more than 2% from where it started. And then we got to ask ourselves the question, well, why is that? Well, for one, because you managed your risk properly, you sized your trades properly, and you never let something run down on you tremendously, which we have plenty of examples of plays which we got in, and if we did not respect our stop loss, it would have been a very bad time for us. And we also got to think, well, what did work out? Why is your portfolio up 2% from where you started? Well, I personally remember Robinhood. I remember that we played this to 2374, and now it seems to me, right, that this level is incredibly important. So for the people who are listening, maybe also you gotta really, I want to drive that point home. Ask yourself the question, what has actually worked? Why do something? Why try to trade, for example, NEO? I know that we tried to trade NEO maybe once or twice and that we've hit our stop loss, but I also know that Robinhood worked very well. And so 2374, right? All these wicks, 1, 2, 3 wicks on the weekly, needless to say that it's a difficult level to get back above. But I do want to say that if this thing eventually gets back above 2374, I think it goes to 2657 next. But I'll talk about that option because I'll also talk about some options essentially from here. But I just want to kind of give that perspective, very important. Yeah, we now have that double top at 2374 and a little bit, obviously, we went a little bit higher. We went about $1 higher, but we didn't want to be buyers here. Wanted to take profit at 2374, and now we're back here. Now maybe there's a way back to the upside here, and in a bull run, this is still on the higher time frames, very much an uptrend. You can see we made a higher low here, we've made a higher high here, and kind of now we're just ranging between this high and this low. I'm drawing it out very loosely. I'll take that off, but maybe there's indeed a grind up, or maybe we just simply want to be prepared from levels below us to play from. So I really want to emphasize Robinhood and the fact that I am bullish on it, which does not mean that we simply take a blind position from here. So this is what I would look at for Robinhood. I'm going to go and start on a 4-hour time frame here. And the first thing that I want to see on Robinhood, right, is that we see a 4-hour candlestick that closes above 2192. And closing above that level is not an entry. That's just a first real important confirmation that we need to see. Because also you can just simply see on this 4-hour candlestick, that's the 9:30 a.m. candlestick we've opened. We've actually today, we've went to 2192, and so far we've seen a big rejection. So this is not what you want to jump into long from here. There's also the importance of waiting for candlestick closures above your level. Now, if Robinhood does close a 4-hour candlesticks, again, during regular trading hours, so that could be not so the 9:30 candlestick here, if this one would close above, that would be a condition. Or if not this 4-hour candlestick, but the next one closes, so at the end of the day, that would also be a condition. But you want to see 2192 that we basically get back above there. If that happens, I'm basically thinking about putting in a long position at that exact level. So say, for example, this thing closes somewhere at 22.3, do you then just jump in market price? I would say no. I want to see that 21.92 level, which we're now wicking from and to the downside. I want to see us do the opposite, literally. And if that happens, right, I want to put my stop loss on, let's see, I want to put my stop loss on 20 points. Let's hover over this candlestick. 20.88 is going to be the stop loss. And I'm thinking to myself, a good target to aim for first is going to be 24.88. So that's literally just the new high which we've made, which if you're uptrending, right, what ultimately happens is that, sure, you're coming down and you're making higher lows, but eventually you're always hitting the high, right? Because what is characteristic of an uptrend is your higher highs. So that is what I'm looking for, a 4-hour candle close above 21.92, then a limit order at 21.92 with just a stop loss at 20.88 and targeting to, I would say, 24.88. And after that happens, the next target can be 26.57 here. So don't want to jump in here. Also, for that position, that's going to be a 4.75% stop loss. So if we round that up to 5%, let's say you enter with your whole portfolio, you risk 5% if your stop loss gets hit. So you don't want to do that. You want to go in with only maximum 20% of your portfolio on this trade to make sure that you're not going to risk anywhere way more than just 1% on your account. And in the meantime, you're of course looking to get a multiple of that. So I don't want to get bullish again here at this level, even though, yeah, when we get above it, it's probably a good sign. I want to be in from lower, but not from here, because from here we could simply just kind of continue this downtrend where we never close above this level, maybe another wick, and then just we go down lower, and we need to look somewhere lower down at levels to potentially catch support. That's one option, but I think Robinhood is a really important ticker for us. Like I said, we want to focus on our winners. And that means that I'm also interested, for example, if Robinhood comes back down and gets, for example, back to one of my levels of interest. Now I'll mark out 2 levels, which one of those levels is already really significant below the current traded price at 21.32. Nonetheless, I need you to be aware of that level, because you never know when Jerome Powell steps on stage during an FOMC and the chart does a teleportation down. That is when people literally lose their shit. Excuse the language, but that is when you got to remain incredibly calm and know what are those levels below us where, yeah, price might get back there, and maybe we got to be bullish, not bearish in such a scenario. So the first level that I got here, which is still an interesting level for me, is basically 19.98. So that is basically that basically implies that we go down here more and we get people out with a stop loss below 20 bucks. That is what we want to see happen if we do not close a 4-hour back above 21.92. Then this simply continues down. People who are long here with a stop loss on this low from yesterday are going to get stopped out. Entering there is also too early because you're downtrending, you're making lower lows, and then at some point, people with a stop loss below 20 bucks get kicked out of the market again. Now, I'm not saying just limit order there. We really got to see, and for this option, what I want to see is a 1-hour candlestick closure back above that level during regular trading hours. And at that point, we can put our stop loss below that low that is made below 19.98 before we close the 1-hour candlestick back above. And when that happens, we can basically target to, I would say a good target to aim for is going to be 22.37. 75% of your position you can take at 22.37, and the rest, right? Maybe it just wants to continue up, and maybe in a bull market you see something like this, exactly what I'm drawing out. Another shakeout, get everybody bearish, and then all of a sudden price goes up again, and you do not want to trade yourself out of everything because maybe it just rips up and it just rips to 26. That's the market for you. So you want to not trade yourself out of it at that first target. And that's a good level to look from. Now, if, and that's a big if, but if we're going to get below 20 bucks, right? And if we're not going to get that, as we would say, acceptance back above, then you really got to be prepared for this thing to take a dump. Because the way that this has moved up, we can come down a ton. And people with stop losses, I'm just going to loosely draw that on my chart here, 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 under this low. All of that is very likely to essentially get stopped out. So I would want to sit at the very bottom of this big range that I have here. And I would want to sit at 15.66. Very simple. So that might really seem like for now, you're like, what? 1566? Yeah, you got to be open-minded for all these options. And you got to have your doomsday scenario levels. And I'm telling you, right? 1566 is a doomsday scenario level for ants. So this can drop way, way lower. You always got to be mindful of that. Now, what I am saying is that I wouldn't become bearish there. I would want to see, excuse this, I have to put on a new tab here because I think I zoomed in with my my Apple mouse. Let's go to Robinhood again. So we're on this chart. Below 1566, you're going to see a lot of stop losses get hit. If we get back above it, same entry criteria as from 1998. So getting below, closing a 1 hour candlestick back above, that is your entry. Stop loss is going to be put below the low that is made below 1566 before closing back above on the 1 hour. And at that point, you just got to be realistic with it, not immediately looking for the highs, but I would be looking back to trade it essentially back in the direction of 20 bucks. So let's see, before we get to 20, where would we want to secure some of our profit? Well, at 18 is going to be a very good target if we get into a position based on that 1566 level. So if that happens, people pile in short here, we get back above that level, and maybe we see a squeeze back to 18 pretty easily. Then people get excited, and then maybe we come back down for a higher low or a lower low. Needless to say, we want to pay ourselves something at 18 bucks. So 18 bucks is going to be good enough for a good first target. You can take 75% of your position there. And then once again, in a bull market, you are going to see massive declines as well. That is how the market works. So I'm looking for that to happen and to stop here, or for that to happen and to stop here, and then ultimately to rip back up to new highs. If we get below 1566, do not get back above. Well, obviously, at that point in time, we'll have to update Robinhood. But for now, that's really the lowest level that I should give you. So that gives some options, right?
Yeah, for Robin. So I got a quick question for Robinhood. I know we have
Yes.
the on the lower, going lower, we have the 1998 and the 1566 levels. We also have the 4 hour candle close above 2192. For 2374, is there anything there, or is that's just like a target?
Sorry. No, I'll take this out. 2374, right? The reason why that level was on my chart, it's not because it's a target anymore. If you recall, that is the level which we played our long position to prior, and that's where we took profit. And that was just the level that is on my chart because that is a key level where if we close, but that is not now for the trade setups, but if we close a weekly candlestick above this level, something which we've tried to do 1, 2, 3 times and which we've always failing, then I'm going to expect upside continuation to 26.57 and then later on to 29.36 already. But so that level is on there not because it's anything for now, but that is a key resistance to basically get back above to unlock the secrets to going back to 30 bucks and higher. Basically, that's your. If I were to mark out any key resistance, that's it. And so I remember very well when we took profit there first. That turns out to be a key pivot.
So a weekly candle close above 2374 wouldn't
that would
trigger
be
an entry,
very, very bullish.
but it wouldn't trigger an entry.
No.
Like that, right? All right, gotcha.
No, because at that point, right, we will already be in something. That's why I gave the option from 2 options lower down, or the option if we close a 4 hour above 2192 to put a limit bid in there. So sure, if we get above 2374 and hold above that level, that is going to be bullish. But I want to get us into a position way before that happens because it's clearly not if we just get bullish from this level and if we have to wait all the way until we get and hold back above that level, essentially our upside potential is going to be rather shallow. So we don't need to be scared to trade ourselves into a long position before that happens. But that 21.92, yeah, that's the
What
key
happens if
resistance.
let's just say the price goes above, 4-hour candle close above 21.92 and then just keeps going up and our limit order doesn't fill. You still wouldn't want to get in at
Yeah,
23.74 with a weekly
no.
candle? This is not because the
Um,
reward isn't worth it.
it, it's a very good question, but a difficult one to answer. As a general rule of thumb, you do not do anything if it does not align your criterion, and you can basically expect an update. Because what I'm giving you is something that most likely, right? Most likely, it is going to fill your limit order. I remember a previous spray on Robinhood as well. It was the same thing before we
Yeah.
got to 23.74, right? I remember we had a horizontal level. We
Yeah.
waited for a 4-hour close above. It limit filled our bid and it basically took off. Maybe at some point it went back below our entry a bit, did not get to our stop loss, then went running, had some pullbacks in the on the road, but made it to 23.74. I recall that position perfectly. So again, how did your account grow? By doing exactly that. So what are we looking to do again? Exactly that. And we're even sticking to the same ticker. And if we do this over and over and over again, maybe Robinhood is going to be one of our staple tickers to play, right? And this is also
GEVO.
how you find out for yourself, like things that you kind of resonate with. And once this stops working, so as a general rule of thumb, if we play Robinhood and at some point we get stopped out twice in a row on two separate trade ideas, that to me is going to be the warning sign that it's no longer the thing that is serving me. And then I got to look at other things that are serving me. So getting stopped out twice in a row, like we had on Neo, for example, that is my sign to not try that again, to just go with winners instead of focusing on that. Now, it's again not to say that you can never come back to Neo at any point in the future, but you would want to give that at least some time and you would want to focus on the things that have worked better. Right? Hope that makes sense. It's very logic,
Yeah.
actually. If you do anything in life, you want to see, you do something, you want a certain result, and a certain action is not contributing to the result you want, and you keep doing that. That's self-sabotage, right?
Yeah.
Or you figure out something that has brought you closer to your goal, and you control yourself. You remember exactly what that was, and you try to replicate it over and over and over again. And you journal. I think I'm not the person who has been talking about that on his coaching, but I heard Ethan talk about that. So that is amazing. And I would highly suggest people, even for that reason alone, I would join Ethan's coaching channel. Even though I don't play options, I would want to hear his thoughts on how to journal properly, etc. So we've got something for everybody, but that is definitely important. I do
Oh
that
yeah.
as well.